If you found yourself paying off one or even multiple drowning in MCA debt, this video is for you. Do not miss it. Just don't do it to yourself. We're going to go into how to consolidate merchant cash advance debt with business line of credit. So if you took out a merchant cash advance and now you're watching daily debits pull money out of your account faster than the business can refill it, there's a real way out. And it doesn't involve a settlement company or a bankruptcy filing unless that's the last case scenario and last option you've got. So let's get fair up and into it. What MCA stacking actually does. One merchant cash advance is usually survivable. The business absorbs the daily hit and moves on. The real problem begins when a second or third advance compounds, gets layered on top to cover cash crunch, and the first one created. So your first MCA, manageable MCA, multiple daily debits draining the same revenue simultaneously, and now you're worried whether or not you can pay your staff. Each new advance exists purely to patch the last one, not growing anything. Now you have multiple daily debits pulling from the same revenue stream, all at the exact same time. So the thing most people get wrong, a regular loan. Paying early saves you interest. The faster you pay, the less you owe overall. Merchant cash advance, total you owe is fixed the day you sign. Paying it off faster does not shrink what you owe unless the provider specifically offers an early payoff discount. So early payoff discounts are not automatic. They're pretty rare. You have to ask for them directly. So the two traps to avoid. Before getting to the actual fix, here's two paths that looks like exits but aren't. So your debt settlement companies only going to a lawyer to understand how this works. It should be your last possible option because before you go and file a bankruptcy, you want to make sure you've explored all options to get yourself out of this hole. So companies that promise to negotiate your balance down for a fee often leave you worse off than when you started, with damaged relationships and higher effective costs destroying your business credit profile. So defaulting outright. Many MCA contracts include confessions of judgment that let the provider freeze your bank account or pursue you legally without a standard court process, and this is not a way out. So both paths can lead to frozen accounts, lawsuits, or terms far worse than where you started. So make sure you're checking all your options before you go into a filing of a bankruptcy. The real fix is refinancing. You replace the merchant cash advance with business line of credit. The new lender pays off the outstanding balance directly. Daily debit stops. Instead of watching money get pulled out of every single day, you work with one predictable structure you actually control, and it becomes this backup line of credit once you get out of it. So let's look at that closely. Why a line of credit specifically? A line of credit is the right tool here because of how it's structured. It's fundamentally different from trading one fixed payback for another. So you got revolving access. That's key. Draw and repay as needed, not a lump sum you pay back once and lose access to, and then have to pay origination fees and closing costs every time you need access to capital. It can be interest only on what you use, so you pay interest only on what you actually draw, not on the full credit limit sitting idle as backup. And it's built for revenue ups and downs, designed to handle slow periods, not fight against them, exactly what an MCA burdened business needs. So what actually qualifies? This is key. This path works cleanest under specific conditions. And here's the realistic picture lenders are looking for. A number of open MCAs. One or two open advances, the business underneath must still be fundamentally healthy. The debits are the problem, not the business itself. Your credit score, you want a personal FICO of 680 or higher for good terms. And below that, lenders treat the file as a higher risk and terms get significantly less attractive, even if you technically get approved. Revenue health. Lenders want to see that revenue is still trending in a workable direction. Debits should be the constraint, not a fundamental business problem. Now, the honest line when it gets harder, if you are 3 or 4 advances deep, clean refinance path gets a lot harder, but there's still a real option. And why it gets complicated is simple. Multiple UCC filings stacked on a business make lenders nervous about where they would sit in line. 3 or more advances signals pattern that standard business lenders want to avoid. The HELOC alternative comes in. A HELOC against your home or even an LLC-owned investment property you own is tied to the equity in that property, not the business's revenue or credit situation. It takes the messy business side out of the equation entirely. So this can become a great option. If the timing is tight, a business line of credit does not land in your account the same day. It typically takes several days to fund. If daily debits are draining you faster than that timeline allows, there's a practical bridge. Get a short-term unsecured loan. A short-term unsecured loan can bridge the gap, giving you immediate breathing room while the line of credit gets fully set up behind it. Line of credit funds and takes over once the line is established, pays off the bridge loan and becomes your primary, flexible capital structure going forward. Now, what lenders want to see? Clean documentation moves this process significantly faster than a vague request for help. When you apply, have these three things ready to go. MCA payoff amount, recent bank statements we want to see for the last 4 months statements, and UCC release confirmation. Have those three in order, and this process will move within 5 to 7 business days. And how gap funded helps here. This is exactly what we work through with business owners in this situation. Our process is straightforward and honest. Assess your situation, match you to the right lender. We match you to the lender who actually fits your specific picture rather than playing Russian roulette online and going to lenders who don't even like your profile. And we'll tell you the truth. If you are past the point where a clean refinance works, we'll tell you that directly instead of wasting your time on an application that will not fund. And we'll actually map out a game plan to get you into a better situation. So if you're ready to find out where you stand, daily debits are draining your account, and you want to know where that line of credit can actually get you out of it, book a call. We'll look at what you're carrying and tell you exactly where you stand. Head over to gapfunded.com/apply. The link's in the description below. And to fully summarize, being stuck in MCA doesn't mean you're out of options. It means you need the right option lined up. And there's more on the channel walking through other ways business owners are getting out from under expensive debt. Without a settlement company and without a bankruptcy filing, no settlement companies, no bankruptcy filing, real options, real outcomes. And if that is the situation you're in, where you do actually have to go to a lawyer and get this absolutely sorted at the bottom level, we'll let you know straight. Worst case scenario, you walk away with a game plan. I'm Mick Wadley from Gap Funded. We're talking days, not weeks. Business owners deserve fast, honest answers, not weeks of waiting and vague promises. Gap Funded works with you to find the right path out of MCA debt into a structure that actually fits your business. So if you loved this video, go down the bottom, smack that subscribe and flog the bell, and I'll see you on the next one.